On October 10th, 2025, Wall Street got hit by a tidal wave. I mean, after months of things feeling kinda calm, the market just took a complete nosedive. It was one of the worst days of the year. But here's the thing, this was not some random fluke. So today, we're gonna dissect the anatomy of this crash to really understand not just what happened, but all the hidden forces that were building up to it.
The analysis from that day put it about as bluntly as you can. The bill came due. You know, that phrase just says it all, doesn't it? It suggests this sense of inevitability, that a big reckoning wasn't just possible, it was long overdue. It perfectly captures the theme of the day, a market that had been ignoring reality for way too long.
And here's the damage report. The tech-heavy NASDAQ, it plunged 3.6% in a single day. That was its worst performance since all the way back in April. The S&P 500 and the Dow, they weren't far behind either. But what's really fascinating here is that this wasn't kicked off by a bad earnings report or some surprise move from the Fed. So what on earth pulled the rug out from under everyone?
Well, the answer, according to our source material, wasn't in an economic spreadsheet. It was in the world of politics. You see, for months, the market had basically been treating all this geopolitical friction as just background noise. But on October 10th, that noise became a screaming signal that was absolutely impossible to ignore.
It was a classic 1-2 punch that happened fast. First, China started squeezing the supply of rare earth minerals, you know, the stuff that's essential for pretty much all high-tech manufacturing. Then, almost immediately, the White House fires back, threatening massive new tariffs. In just a matter of hours, that entire AI-driven rally that had been propping up the whole economy was suddenly put on notice.
And the market's reaction? Oh, it was swift and it was brutal. The VIX, which you probably know is the fear gauge, just exploded. It jumped over 32% to a level we hadn't seen in months. This wasn't just a little bit of concern. This was a full-blown wave of panic. That cushion that investors thought they had, poof, it was gone.
This quote just nails the psychological shift perfectly. You see, the market had been operating under the assumption that any trade spats would be minor, manageable frictions. But what happened on October 10th forced this brutal repricing. All of a sudden, political risk wasn't some tiny footnote anymore, it was the headline.
Okay, but that tariff threat, that was just the trigger. To really get why the market was so vulnerable in the first place, we have to dig a lot deeper. The source material argues that this huge, profound disconnect between how the market saw the world and what was actually happening politically had been building for months.
And to explain this disconnect, the analysis brings up a really fascinating concept from George Orwell's classic 1984, Newspeak. The whole idea is that when you start destroying the real meaning of words, you make it impossible for people to think clearly about what's actually going on. And according to the source, this is exactly what was happening in the world of finance.
Now here's where the argument gets really interesting. It suggests that the same kind of language manipulation we see in politics was happening in economics. The source points to examples where anti-fascist was being twisted and redefined as terrorist, and it argues that in a very similar way, economic decline was being repackaged and sold to us as prosperity. It's a fundamental breakdown in what words even mean.
And as a kind of global reality check, the source points straight to the Nobel Peace Prize. While the administration was labeling certain activists terroristic, the Nobel Committee awarded its highest honor to Maria Corina Machado, a Venezuelan anti-fascist. This was seen as a pretty stark symbol of the disconnect between the official story and, well, global reality.
And this all boils down to the most crucial point for any investor. If the language being used to describe political reality is this unreliable, then how in the world can you trust the economic data that's coming from the exact same source? That question was right at the heart of the market's sudden wave of anxiety.
So this brings us to the next key takeaway from the source material, which is this crash was not a surprise. In fact, if you were paying attention, the warnings had been sounding for months, and they were getting louder and more urgent as time went on.
Just look at this timeline. You can see a clear pattern of escalation. As early as January, there were warnings about completely unsustainable valuations. By March, technical signals were breaking down. In August, an emergency action plan was actually issued. And just days before the crash, the analysis was comparing the AI boom not to the dot-com era, but to the much more sinister 2008 financial crisis. The drumbeat was getting louder.
Let's drill down on some of these specific warnings because they are chilling.
We see these clear alerts about extreme valuations, really bad technical signs, and massive ignored bank losses. But maybe the most chilling warning of all compared the market structure to the 2008 crisis, blaming, and I'm quoting here, bullshit accounting practices. The writing wasn't just on the wall, it was literally in the logs.
So, if the crash was foretold, the big question is, was there anything you could do about it? Was there a way to prepare? Well, according to the source, the answer is yes. There was a clear, defensive playbook that had been talked about for months, and it was designed to protect portfolios from exactly this kind of disaster.
The strategy basically rested on 3 pillars. First, raise cash, and a lot of it. The idea was to have that dry powder ready and to reduce your overall exposure. Second, add massive hedges. Think of them as insurance policies for your portfolio to protect what you still own. And third, and this is a great way to put it, be the landlord by selling options contracts. This lets you generate income from the market's fear, from its volatility, instead of just being a victim of it.
And if you're wondering what the price of being unprepared looks like, well, here it is. This is a real-time account from a trader whose borrowing power, their margin, was completely wiped out by that VIX spike. They were forced to sell their positions at the absolute worst possible time. It's just a tangible, painful example of the price of complacency.
So, after all that, what's the ultimate lesson from the crash of October 10th? Well, I think it all distills down to one core, powerful idea.
On that day, we got a very, very clear answer to this question. For months, the market acted like it could exist on its own little island, completely separate from the messy reality of politics and language. But in the end, reality always has a way of asserting itself. The market didn't break reality, reality broke the market. And that is a lesson worth remembering long after the dust settles.